Hi guys, I just want to share this strategy with you, or this indicator with you. It's a little bit different to stuff that we cover on the course. Obviously everything works together, your support and resistance and all that kind of stuff. But I just really wanted to go through this particular indicator. It's called the Ichimoku Kinko Hyo, which is a funky Japanese name, and apparently it translates to wonder of equilibrium chart. So it looks pretty complicated at first. I always tell people, if you want to have a chart open and kind of impress your friends as they walk past your computer, put this indicator on. It looks pretty snazzy. But it's actually not that complicated when you break it down. So there's a number of lines and stuff on here happening. So I'm just going to take you through the lines and kind of how to read them and stuff. So the first line I want to just discuss is this blue line. It's called the conversion line. And what this particular line is, or does, or indicates, is the last 9 periods, the last 9 candlesticks, and it takes the high of the last 9 candlesticks and the low of the last 9 candlesticks, and it plots a line 50% of the way through. So in other words, it takes the high and the low and then divides that by 2, and it gives you this, it's almost like a moving average that goes through. So that's the first line I want to kind of discuss with you. It's the fastest of the line. It shows a lot of the short-term support and resistance, as you can see here, where price finds resistance and resistance then comes, and then eventually will find support. So it's short-term support and resistance line there, or your short-term, very short-term trend line. Then you've got another line here, which is called your baseline. This works on a similar principle. Just the only difference is it takes the last 26 candlesticks and it takes a point, or plots a line halfway between the high and the low of the last 26 candlesticks, and that is called your baseline. So basically you can say when these two things cross, when the red crosses down below the blue, that is a bearish signal. And then you can say when it crosses up, it's a bullish signal. So there you can see it's crossing up again for a bullish signal. So these two lines are obviously important. You take the signal on the cross of the when the blue and the red ones cross. So then the next couple of lines I'm going to talk about are these lines here at the top. You've got the orange line, and then you've got the grey line. So when these things cross, you can see they give you a kind of a clouds thing happening here. So when the cloud is orange, then that indicates that the market is bullish, and then when the cloud is grey, that indicates that the market is bearish. The other thing just to factor in as well is that, yes, that is one way. The other way to look at it is that if the price is moving below the cloud, then that indicates that the market is bearish. And if the price moves up above the cloud, then you would say the market is bullish. And sometimes you'll find that it moves within the clouds, and then you just know the market is kind of ranging or very flat. And the other thing that you'll see with the cloud is that depending on the thickness of the clouds, will depend on obviously the volatility of the market and how hard it's trending down or up. So you'll find as well a new trend tends to happen when the market breaks above the clouds. So here, for example, it's been below the cloud all this time, then all of a sudden it breaks up and does a little upward movement, or it breaks down and does a downward movement for us. So a break of the clouds indicates a change of trend. So you can see here we had an upward movement, and then it's come down and it's broken down below the clouds, and then we've had that downward movement happening there. So yeah, so the cloud in real time is actually shifted forward 26 days. So it means that it plots 26 days ahead of the last price points, and it indicates future support and resistance. So if we take it right back to the start, then you can see this cloud actually happens way in advance. These two ones, as I say, they happen in real time. And then you've got one last thing that we look at, which is called your lagging span. So it's what it does is it shows the current price, but it plots a line 26 candles ago. So if I measure from there to there, you can see on the indicator there it says 26, which means it's 26 candles again. So it also compares the current price to where the market was 26 candles ago. So if you find that this line is below the price action of 26 candles ago, then you're going to basically be able to say, yes, that is a strong trend, or the gap between there means the market's come down quite fast. So that's giving you a decent indication as well of trends. So it's a trend. It's very good to identify if the trend is going up and down. Here, for example, you've got quite a strong downward trend, and you can see that because you've got the cloud at the top. Then you've got the blue line is predominantly above the red line, and then you've got the lagging indicator, which shows you what the price was doing some candlesticks ago as well. As I say, to get the signal, then basically you would want the clouds. You want the price action to be below the cloud, and then you also want the green line to be below the price action, and then when the blue crosses over the red, then that will give us a bearish signal. And then obviously when they cross back, then you could look to close that trade there. So it's an indication when things start to cross back up that the trend's maybe not as strong anymore. There you could have entered. The other thing you can look at is if the candlesticks close back above the red line. So you see how closely the candlesticks hit. They use almost this line as a resistance level. So all of a sudden you get one that's closed above, and then you use that as a method to exit your trade, or as a logical reason to exit your trade. So play around with this, guys. It's really good at giving you or showing you a strong trending market. Obviously we as traders want to trade or we like it when the market is trending strongly. So yeah, play around with it. There's another video I'm going to do next week, which will just elaborate a little bit on this method. Any questions? I would suggest, as I say, go back through your charts, just have a look through it and see how it works, and go back through your charts. Yeah, let me know if you've got any questions on it. And then yeah, pop onto the chat room if you like. Get me on the chat room, or you can email me or give me a call. And yeah, look forward to hearing from you guys.